think all of us want to pay the least amount of taxes that are possible, and of course we want to be legal in doing so. And so as you're looking to the coming year and wondering about your taxes and preparing for that, the question is, are Medicare premiums tax deductible? So in this video, I'm going to show you how you can use your Medicare premiums as a tax deduction. Now, in order to know whether or not my Medicare premiums and expenses are going to be tax deductible, we have to decide, am I going to use the standard deduction or am I going to itemize? Now, the standard deduction is a predetermined dollar amount that someone can deduct regardless of what their actual deductions would be. And so that amount of money is going to vary whether you're a single filer or you're a married filing a joint return, and certainly also as well as your age. So when someone takes a standard deduction, they don't have to take the time to worry about this list of itemized deductions. But if they do itemize, what's happening is they're going to list a variety of things that they're able to deduct off their taxes, and then eventually there will be a total down here. And so the point is, if my total of itemized deductions would exceed what my standard deduction will be, then it's certainly going to make sense to go ahead and itemize deductions, and part of those Medicare costs are going to be included in that list. Now, I just want to read a quick article to you about this whole concept of standard versus itemized deductions. This is a report from the IRS, and it says this: there are two ways that you can take deductions on your federal income tax returns. You can itemize deductions or use the standard deduction. Deductions reduce the amount of your taxable income. Now, they say the standard deduction amounts vary depending upon your income, your age, whether or not you're blind, and your filing status, and these amounts change every year. So the article goes on to say that there are certain taxpayers that can't use the standard deduction, they're forced to itemize. And this group of people would be these: a married individual filing as married, filing separately, whose spouse itemized deductions. So you're married, but you file separate returns. And so if your spouse is itemizing, you also are going to have to itemize. Secondly, an individual who files a tax return for a period of less than 12 months because of a change in his or her annual accounting period. It doesn't apply to a lot, but that's another group of people. Number three, an individual who is a non-resident alien or a dual status alien during the year. Again, they're not going to be able to use the standard deduction. They're going to have to itemize. However, it goes on to say a non-resident alien who is married to a U.S. citizen or a resident alien at the end of the year and who chose to be treated as a U.S. resident for tax purposes can take the standard deduction. And then lastly, an estate or a trust or a common trust fund or a partnership cannot use the standard deduction. They go on to say you should itemize deductions if your allowable itemized deductions are greater than your standard deduction. That was what I was talking about over here. Or if you must itemize deductions because you can't use the standard deduction. Just that group of people that we said can't do this, they're forced to do this. Just one last statement on this. This article says you may be able to reduce your taxes by itemized deductions, and you would do so on the Schedule Form A, and I'll show you that here in just a minute. And by itemizing these deductions, what's included in the list? It would be amounts that you paid for state and local income or sales taxes, real estate taxes, personal property taxes, mortgage interest, and disaster losses. You may also include gifts to charities and part of the amount you paid for medical and dental expenses. And that's why I'm reading this to you. So that's what we're going to get into specific. Those costs for medical and dental expenses. And you may benefit by scheduling on the Form A. Fiduciary investment advisor. So I deal with these kind of issues all the time, but I want to make sure as we get into this, I'm not giving anyone here tax advice. I'm just simply telling you how these items could be possibly tax deductible. You need to talk to your accountant for more specific information. So we begin exploring the answer to this question, whether or not we're going to be able to do this, by deciding, am I going to take the standard or will I itemize this year? Now, this next document is from the IRS website. Is this the 2022 1040 form? Okay, and it's going to talk about the standard deductions and some of the exact amounts of those. And over here on the left side of this, you'll see this area right here, and we'll bold it. So this is going to be on the form. And now let us, we'll highlight this a little bit more, and I'll show you exactly what those standard deductions will be if indeed we cannot get enough itemization to exceed that amount. So again, it depends upon your filing status. So we have here single or married and filing separately. that standard deduction is $12,950. So if my itemizations would exceed that, then again, I'm not going to take the standard deduction. Married filing jointly or a qualifying surviving spouse, that number goes to $25,900. If you're a head of household, then that number is $19,400. Okay, so the standard deduction is going to vary. Now keep in mind, if you are 65 or above, you can actually take an additional standard deduction. So in this category here, a single, $12,950, you can actually add $1,750 to that to increase that standard deduction. Over here, if you're married and you're filing a joint return, it's $1,400 if you're 65 and above, and that would be for each of you. So that would be, if you're both above 65, that'd be additional $2,800. And so that would put us at what, $28,700. And so if our itemized list is greater than that, then again, we're going to itemize instead of taking the standard deduction. And again, head of household, we can add $1,750 to that as well. So that puts us at a higher amount if we're 65 or above. All right, so that's how much if we're going to claim that deduction, we have to make sure our itemizations are not going to exceed that. If they do, then we're going to itemize, and then we'll be able to see a reduction of our tax bill because of our Medicare premiums and medical expenses. So once we decided that we're not going to take the standard deduction because it's lower than our itemized list, then we're going to use the Schedule A. And of course, your accountant would do this for you, but I just want to point out this is the Schedule A. And what I'm going to do is focus on just this section right here because that's really the subject of our video of our medical and dental expenses. All right, and so we're going to be able to total those up. Now I'm going to read a list to you of those things that you're going to be able to count, okay, so you'll know exactly what they are. So as we consider exactly what we can include for medical and dental expenses, I want to make sure that I read the list to you so you're very clear on this. So this comes right from the IRS website, and it's titled 2022 Instructions for Schedule A. So here we go, medical and dental expenses. You can deduct, now watch, you can deduct only the part of your medical and dental expenses that exceed 7.5% of the amount of your adjusted gross income on Form 1040 or 1040 Senior. Okay, so only those that exceed 7.5% of your modified adjusted gross income. All right, and so let's look at the details of that list of items you can deduct. Number one, insurance premiums for medical and dental care, including premiums for qualified long-term care insurance contracts. Now, just a side note on this, depending upon your age, will determine how much of those long-term care contracts you're going to be able to use as a deduction. Again, that's a whole other topic, but we go to a publication, IRS 502, and it gives you the details of that. So let me read it again. Insurance premiums for medical and dental care, including premiums for qualified long-term care insurance contracts, which is long-term care insurance. Number two, prescription medicines or insulin, acupuncturist, chiropractic care, dentist, eye doctors, medical doctors, occupational therapists, osteopathic doctors, physical therapists, podiatrists, psychiatrists, psychoanalysts, and psychologists, medical examinations, x-rays, laboratory services, insulin treatment that your doctor ordered, diagnostic tests such as full body scans, these are MRIs, CAT scans, PET scans, all that, pregnancy test or blood sugar test, nursing help, hospital care, including meals and lodging, clinical cost and lab fees, qualified long-term care services. Again, IRS publication 502 gives you the exact details. Here we go. The supplemental part of your Medicare insurance. That's your Medicare Part B premium. For most of you, it's $164.90 this year. For some of your higher income, if you're above as a single filer, $97,000, or a person who's married and files a joint return above $194,000. Those premiums that you're paying for that, for your Part B, are in the list where you can itemize the premiums you paid for your Medicare Part D insurance, that drug plan that you have. You can also deduct expenses for a program to stop smoking and for prescription medications to alleviate nicotine withdrawal, weight loss programs that are treated because of a specific disease, including obesity. If the doctor diagnosed that as a disease, then you can deduct those expenses. Medical treatment at a center for drug or alcohol addiction, medical aids such as eyeglasses, contacts, hearing aids, braces, crutches, wheelchairs, guide dogs, including the cost of maintaining them, surgery to improve defective vision, such such as laser, eye surgery, or radiokeratomy. Lodging expenses while away from the home to receive medical care provided for a physician in a hospital or medical care facility. Ambulance services and other travel costs to get medical care. If you use your own car, you can include what you spent for gas and oil to get to the place where you receive that care. You can add parking and tolls to the amount that you claim. The cost of breast pumps and supplies that assist lactation. Personal protective equipment such as masks, hand sanitizer, sanitizing wipes for the primary purpose of preventing the spread of coronavirus. As you can see, it's a very, very detailed list, almost everything. Now, here are some things that you cannot include. You cannot include the cost of diet food. That's not in the list. Cosmetic surgery, unless it was necessary to improve a deformity that was related to a congenital abnormality or an injury from an accident or trauma or a disfiguring disease. Meaning, if it's just elective for cosmetic purposes, can't deduct it, but if it's some other reason, you can. You cannot deduct life insurance or income protection policies. You cannot deduct the Medicare tax on your wages. And that, which is that right now it's 2.90%, half paid by the employer, half paid by you. If you're self-employed, you pay the full amount. So that Medicare tax that we're using for FICA taxes or for self-employment taxes, that is not included in the list. You cannot include nursing care for a healthy baby. You cannot include imported drugs that are not approved by the USDA or the FDA. You cannot include non-prescription medications. You cannot include travel your doctor told you to take for a rest or some kind of a change. And you cannot include funeral, burial, or cremation costs. All right. And so the whole point is there's lots of things you can deduct. Now, whose medical and dental expenses can you include? Well, you can include yourself and your spouse and all dependents that you're going to be able to claim on your return. All right.
Hey, my name's Josh Music, and if you've been enjoying my dad Marvin Music's content, you really need to go to our website, MedicareSchool.com. When you go there, you'll be given the opportunity to download a free 1-hour Medicare Essentials workshop, and it's going to take you all the way from Medicare A to Z. By the time you're done watching that workshop, you're going to know how to enroll in Medicare, when to enroll in Medicare. You're going to know the differences between Advantage plans, supplemental plans. You're going to know how to get drug coverage. You're going to know everything you need to know to get the best coverage possible. So go ahead, go to MedicareSchool.com and watch the Medicare Essentials workshop.
So that's the list of items that are going to include here on item number 1. And again, I'm just going to give you some hypothetical numbers here. Let's say that that total list is $40,000, okay, in itemized medical expenses. And it says here on the 1040 form, an enter amount from 1040 or 1040 SR, line 11. And all that is your adjusted gross income. So let's just say that happens to be $100,000, your adjusted gross income. And so what we need to do then, it says multiply line 2, your adjusted gross income by 7.5%. Okay, so 7.5% of $100,000 would be $7,500. All right, because remember, we can only deduct what is above that 7.5%. So that first, in this example, because my AGI is $100,000, that first $7,500, I cannot deduct that. But everything above that is now going to be a tax deduction. All right, and so the difference would be what? $32,500. All right, and so I would be able to take that amount of an expense off. Okay, that's above that 7.5%. So what's the point? If I am married and my standard deduction is $29,950, then obviously that amount here is higher than that. Then it's going to make sense for me to take the time to itemize all the bills, because I can take other deductions as well. My charitable giving, home interest, those kinds of things will be included. So again, in this case, someone's going to say, hey, it's going to make sense for me to itemize. Now, let's look at it differently. Let's say that someone has only $20,000 in medical bills. Again, income at $100,000, 7.5% is going to be $7,500. They cannot deduct that. That's off limits. So the difference, as we subtract that, would be $12,500. So again, now, if they don't have any other deductions other than these, and the standard deduction is going to be $29,000, then if this number is lower and we don't have anything else to put on this list, then we're probably not going to be able to deduct our Medicare and medical expenses, because the standard deduction is going to make more sense for us. So as you can see, the the answer to our question, whether or not we're going to be able to deduct our Medicare premiums as well as our medical expenses, it all determines on how great of an amount that is. And so it just depends on what this number is, plus all your other itemized list. And so if that number exceeds the standard deduction, then it's well worth your time and effort to keep those receipts and to claim all those items on your tax return. And if they don't exceed the standard deduction, then we're not going to do this. We're not going to do the Schedule A, and you'll just take that standard deduction.